All right, let's dive in. Today, we're looking at three financial stories that, on the surface, have absolutely nothing to do with each other. We've got a massive lawsuit, a really quiet power play in the banking world, and the crypto market, which is just kinda stuck. So, what happens when you stack them all together? Well, you might be surprised at the picture that emerges.
Think about it. You have this huge public legal battle that's putting traditional banks on the hot seat. Then, completely under the radar, you have a major fintech company making a super strategic move. And finally, you have the entire crypto world holding its breath, just waiting. It feels random, right? But it's not.
And that's really the question we're asking today. Because when you layer these seemingly separate events one on top of the other, you start to see a blueprint for the future of finance. And it's a future that's being shaped by some really interesting forces: politics, long-term strategy, and a whole lot of patience.
So let's start with our first layer, and this one is a big one. We're talking about a heavyweight clash between Donald Trump and JPMorgan Chase, one of the biggest banks on the planet. And trust me, this is way more than just another headline. It could be a real turning point for the entire industry.
Yep, you're seeing that right. $5 billion. That is the absolutely staggering amount Donald Trump is suing JPMorgan for. The claim? That the bank shut down his accounts for purely political reasons. Now, a number that big, it forces everyone, and I mean everyone in finance, to stop and pay very close attention. So what's really at the heart of this thing? Well, on one side, Trump's team is arguing that after the events of January 6th, JPMorgan didn't just close his accounts, but effectively put him on some kind of informal blacklist. On the other side, JPMorgan is saying, hey, politics has nothing to do with it. We have the right to end a business relationship if we see a regulatory risk. And here's why this is such a big deal. For years, debanking, this idea of denying someone banking services because of their political beliefs, was mostly just a talking point, something debated on cable news. This lawsuit drags that concept out of the political arena and drops it right into a court of law. Suddenly, for big banks, this is a very real, very tangible legal and PR nightmare. This quote just nails it, doesn't it? As the traditional big-name banks get tangled up in these messy culture wars, fintech companies start to look, well, a lot better. Why? Because right now, they're mostly seen as neutral platforms. They're just the pipes that move money around, not the gatekeepers deciding who gets to play. And that's a huge advantage.
Okay, so let's move to our second layer. Now, if the Trump lawsuit is a loud, messy public brawl, this next story is the exact opposite. It's a quiet, calculated, and incredibly strategic move being made by the fintech company Affirm.
So what's Affirm doing? They've applied for something called an Industrial Loan Company Charter, or ILC. The easiest way to think about it is like a bank light license. It lets them offer FDIC-insured products, things like loans and savings accounts, but without all the heavy regulations that come with being a full-service retail bank. It's a really clever way to get the best parts of being a bank without all the baggage. And the perks? Oh, they are huge. With this charter, a firm suddenly gets access to deposits, which is a much cheaper way to get money. They don't have to rely on other banks as much. They can diversify where their money comes from. And they can start offering a whole suite of new financial services directly. This isn't a short-term play. This is about building a rock-solid foundation for the future. And that's the key takeaway here. Affirm's move isn't splashy. It's not designed to grab headlines. This is all about strategic insulation. They are slowly and deliberately building a regulatory fortress around their business. It's the classic tortoise and the hare story, right? While everyone else is sprinting, they're just methodically building their shell. Now for our third and final layer. Let's pivot to the Wild West of finance, crypto. Except right now, things on the frontier are oddly quiet. And it turns out the silence in the Bitcoin market is actually telling us something really important. I mean, this is the question, isn't it? It's what every single person in crypto is trying to figure out. After all the crazy ups and downs, the massive bull runs, what is Bitcoin going to do next? Where is it headed? And the answer, at least for right now, is nowhere. For the past month or so, Bitcoin has just been moving sideways, stuck. It's not crashing, but it's not breaking out either. It's just there, in a stalemate. I love this quote because it captures the situation perfectly. This period of doing nothing isn't just boring, it's a stress test in slow motion. It's testing the resolve of investors. It's testing the business models of crypto exchanges and miners who rely on volatility. It's basically a test of the entire system's endurance. So, you see, the lack of a clear signal is the signal. What this market is telling us right now is that trying to predict the next explosive move is a fool's game. The winning strategy is patience. The crypto market is starting to mature, and it's rewarding the people who can just sit tight and wait. Okay, so we've got big banks caught in a political storm. We have a smart fintech company quietly building a fortress. And we have the crypto market learning a valuable lesson in patience. Let's stack them all up and see what the full picture really looks like. And here it is. This is what the fintech stack could look like over the next few years. At the very bottom, you've got traditional finance, the foundation, dealing with a completely new kind of political risk. In the middle layer, you have these modern fintechs, building deep, strategic regulatory moats. And then on top, you have the speculative world of crypto, which is learning that stability isn't such a bad thing after all. When you put it all together, what you see is a financial world that's truly in motion. The old guard, the titans, are facing threats they probably never saw coming. The new challengers are less focused on hype and more on building solid, lasting foundations. And the pioneers out on the edge are growing up. And that really leaves us with one last question to chew on. The titans of old finance are being forced to play defense, while these strategic turtles of fintech are just making slow, steady, and very smart progress. So in this new race between raw power and quiet patience, who do you think is going to win? It's something to think about. Thanks for tuning in.